This is hard. It is not easy. If it was easy, everyone would be millionaires, right? But what I'm going to try my best to do is to break this down over a number of segments, right? I'm going to cover each one in depth, I think. If maybe not, maybe we'll cut this down into subsections. But for now, let's assume that we're going to kind of create this whole session around these ideas here, right? So what are the ideas? The ideas are, we're going to talk a little bit about market dynamics. This is that interaction between higher highs, lower lows, lower highs, higher lows, all of that kind of movement that you tend to see on patterns, and understanding moreover the absolute significance of what it means. Because oftentimes I see a lot of traders who kind of understand what market structure is, but they don't really understand it to the level of detail, understanding from how you get to a sign of strength and how you get to the sign of weakness for when you come to your trade execution, and where the optimal supply and demand zones, and then, you know, whether that's relative to liquidity concepts. All of that is massively important. And so if you don't know any of that and you're at the start, you may need to watch this a number of times to get this, you know, crystal clear. What's the order of magnitude? How are we going to go about this? So first and foremost, right, I'm going to show you, and we're going to draft this in real time, right? Our trading plan is always going to be on crypto, but this will map to anything really. But we're going to do this, we're going to show you in a theoretical sense here, and then we're going to move down to this is the live price action of Bitcoin, and we're going to move all of this down into the live Bitcoin price and apply the concepts to show you how we can start to navigate to current time. Then we're going to talk a little bit about multi-time frame analysis, how we use different time frames in order to get a better execution of our trade, and then ultimately how we manage that trade. And then once we've put all of this stuff together about how confident we feel in terms of knowing all of this kind of really good stuff, can we go and do this and execute at speed on another coin or another currency, you know, another cryptocurrency. So that's really what we want to achieve. We want to be really like a Jedi Knight. We want to be able to take our lightsaber out of our belt and be able to whip it round like nobody's business. If someone sees me with a lightsaber chopping up markets, understanding the dynamics of markets, understanding where the supply and demand is, that's really where I want you guys to also be at as well, right? So that's everything we're going to cover. So let's dig in, my friends. How do we normally see patterns on charts, right? Normally, they are something like this, right? You'll see this move here. Let's assume this is like on the 4-hour time frame, right? And you see this kind of movement and mentality. These are just represented as candles, right? And then maybe you'll get something like this, something like this, something like this, and then something like that, okay? Great. We have some nice candle formation, right? And so what we want to be able to do is try to figure out what's going on here. You know, what exactly is going on at this stage? Is it bullish? Is it bearish? You know, what is it? You know, how can we analyze through a number of ideas what's going on? Because our job as analysts, in my humble opinion, is to be able to understand the direction of flow. What's exactly happening? How can we anticipate movements from what we're seeing here, right? And so let's just first start off with the first key concept, right, of your swing points. I want to know, where are my swing points? Do you know what swing points are? Swing points are those points on a chart, whatever time frame you're looking at, the highest and lowest points within the swing, right? And so I think it's quite easy on this one, and it'll be a lot more difficult when we come into the actual chart in itself, but let's just go with that, right? So where's the swing points? The swing points is here, right? That's the first move up. Then of course we change direction and move down. Where's the lowest point before we reverse? Is it here? We reversed here, right? So why not here? We also reversed here, so why not here? And we reversed here, so why not here? This is the actual lowest point that broke this structure here, right? This is a really significant concept when we're talking about the swings, which is there to there to there. That's the highest point, that's the lowest point, and then we move again to a new higher point. So the swings are relatively straightforward, right? They're the points on the chart, whatever market structure we're looking at, which we will determine as the swing range, okay? Nice and easy. What about the internal structure? Actually, I'm going to add and denote another point to this, right? There's a new key concept that I think we just need to add in. And we'll color this one, I don't know, let's color it green, right? And we're going to call this swing continuation, okay? Color it the same color. So where's the internal structure? If these are the swing points, the internal structure is going to be here, right? Let's color it yellow. So we have higher high, higher low, higher high, higher low. Top of our swing, still we have a higher low, but then we fail with this high. We do not create a new high here. But remember, when this is live price action, you know, you're seeing this movement to the upside, but then you see that we come here. Really, the most important thing that we're waiting for is, do we break a change of character, and a concept we'll get into in a second, below this high? Because each time market structure is just being bullish, pulling back, going high, pulling back, going high, pulling back. This time we don't go high. So we're waiting to see what happens. Do we break this, or do we just make a new internal low, but not lower than here, and then, you know, we continue higher and create another breaker structure? The moment we do this and we create that change of character is the moment that we can create a swing continuation, or the point on the chart which, you know, we can call a swing continuation. Or actually, just to, in fact, let's add another point, right? To add more complexity into it, we'll color this one, let's call it purple, right? Oh, this is getting fun. Right, okay, let's call this swing pullback, okay? And then let's call this, just copy the text here, bring that text down to here. Let's color it the same, big that color there. Actually, let's make it white so it's nice and clear, right? Let's call this swing continuation, okay? Right, so every single time we approach our charts, we want to be really mechanical with everything we do. There needs to be no gray areas. It needs to be absolutely black and white, because with discretion comes emotion. The more mechanical you can be with your approach to charting, the more emotions that you can keep out of it. And emotions are never great, right? Emotions are never great for traders. We want to try to be as emotionless as possible. The only time discretion should come into your play is really on trade execution, and there's a little bit of wiggle room which we'll go over. Okay, so let's continue, right? So here is our swing pullback. So this is the point at which we created a lower low, but we don't know it's a swing pullback until we break this point here. And again, I'm going to map all of these out as we go. In fact, let's map them out now, right? To here we have breaker structure, right? Breaker structure because we went high, low, and then we broke the previous high. And of course, the next element is the same again. Have a break of structure. We do not break the structure to the upside. In fact, we break the structure to the downside, but we don't call it a break of structure. We simply call it a change of character. It's where the character of the move to the upside has just become a pullback, right? So what's next? Next, we pull up, and then we get a new break of structure. Because once a change of character is confirmed, the next one is a quite natural break of structure. So if we've created a break of structure and now we reverse back to the upside, What would this be? Would it be a break of structure, or would it be a change of character? Before we do that, let's just plot our colors, right? That's yellow, that's yellow, that's yellow. Now here we have another change of character. Prices come up here, but right now what are we waiting for? Does this low hold and then we go higher, or does it break? Which can very much happen. I'm going to bring in another concept in just a short while, which will help clear all of this confusion up. But right now we have another swing pullback, because we know this has continued to move down. It's broken here. What is this? It is another change of character, because once you've changed character one way and then you go back and break the low again, it's just another change of character. It's very noisy, very messy. This is horrible price action. This is that kind of inducement that you tend to see within markets. And again, we'll try and cover it when we go into the chart, and that really confuses a lot of people. But from our perspective, I'm going to kind of skip over a lot of that, because we'll refine it, right? Then we create this low. Then what are we waiting for? Bang. What would this be? Change of character or break of structure? Well, technically it is still a change of character, because each time we've created a new change of character, right? We haven't created any other internal structure. We added a change of character here, trend continuation, break of structure, but then broke back above, change of character, broke back down, change of character, broke back above, change of character, come back down. Now we get a break of structure here. And in actual fact, this really, as well as being our swing point, also is the start of our trend continuation. So that can also be white and also purple, pink, but that is our trend continuation. It's also our swing point, right? That's the point at which we got that continuation from that change of character. Then we come back into the internal swing, create a low, and eventually finish off our nice internal structure with a move here. So this is just going to be a break of structure. Okay, so we've mapped out our chart as we want to see it. Break of structure, nice movements. Identified all of the key points on the chart that we want to know as interesting points for us to be able to manage. Next thing we need to do is understand our strength and weakness, right? So that we covered our market dynamics. This is just around understanding what's going on the internal time frame. Oh, sorry, not the internal time frame, but what's going on the chart and pattern that we see in front of us. If this was live price action, understanding what's going on here. To understand our strength, whenever we are bullish, what are we focusing on? When we are bullish, we are focusing on one thing and one thing only. Bullish equals strong lows and weak highs, and we remain, this is for the swing, and we remain in this way until such time that we break. Now the opposite is true.
It is true.
Thanks, Siri. The opposite is true when we are bearish. We're only focusing on weak lows and strong highs. Now, rule number one, whenever we are trending and we are bullish, we never expect the strong lows to break. We always expect the weak highs to break. When we are bearish, we only ever expect the highs to hold, and we only ever expect the lows to break, right? Let's map that out. Just put them over here so they're not in the way. Hopefully you guys have got your notepads out and you're making notes of all of this, or just rewatch the video. Okay, so this is all relative to the swing, only the swing. Of course it's relative to the internal structure, but this becomes weaker as you get lower into the time frame. So on a 4 hour or a daily or a weekly or monthly, the this statement becomes stronger and stronger, right? External, strong, low. External, because the swing is the external. Internal is the internal structure. External is the swing points, right? Needs to be yellow. Okay, this was the previous structure. I'm gonna put it to there, but it broke. This is the external weak high. So we always anticipate that the weak high will break when we are trending bullish. We always expect the external strong low to hold when we are bullish. That is essentially how we map out our swing range. We don't care what goes on here until such time that this breaks or this breaks. If they don't hold, price can do whatever it wants. All we're doing is mapping out and understanding relative to the swing what's going on, and we'll dive into the internal time frames shortly. The one last concept I want to cover on this section is just around the strength and weakness. So again, understanding that the external strong low is the strength, understanding that the external weak high is the weakness. We can then just take our 50% fib, and from a trading narrative, what are we expecting to do? Well, really, once we've identified our range and we know our swing range is valid, we're really only going to be taking longs down in this zone here, right? This is the optimal zone to be taking trades for longs. But remember, you would say, well, is surely up here is where you want to take trades for short, and right? That's not strictly true, because if you are taking trades to short at this zone, what do we always expect to happen? We always expect the external weak high to break. And so taking short when we're coming up to this range when we are bullish is not a good idea, right? That's the rule number 2. Understanding the difference between the weakness and the strength. Trading from a sign of strength always trumps trading from a place of weakness, okay? So when we start diving into the charts, we'll cover all of these important fundamental factors. But for now, I'll leave that on the chart actually. This is kind of the introduction level. I just wanted to really go over market structure, give you all of the kind of key topics and points that we want to cover. We have not covered liquidity concepts. We have not covered supply and demand. Really, all we've covered is market dynamics, strength and weakness. These 3 concepts here, multi-time frame analysis. We've kind of covered a little bit of multi-time frame analysis, but nowhere near enough. These next couple of concepts, the supply and demand and the liquidity concepts, are really the differentiator between those who are profitable and those who are not. And so I'll see you guys in a few seconds just to cover the second topic. Cool. Okay, my friends, so now we are into the chart. So how do we apply all of what we've just taught ourselves on that previous kind of overview and apply to the charts? Well, let's get into it, right? So first thing we want to do is map out our swing ranges, right? Exactly like we did before. We'll start here. We want to colour this. What was our colours again? We had this nice swing colour there, didn't we? There's the high, there's the low, there's the high, there's the low, there's the high, there's the low, there's the high, there's the low. And where's where we have that fuckery, right? Here's where we get that fuckery where we think price is going down, but in actual fact, all it does is breaks structure, right? Creates a change of character. Okay, so where does it change character? Well, let's just refine it a little bit. So remember, this was our swing range initially, right? And what do we call that? That's the external strong low, right? Because markets move bullish. This is what our external weak high, which we always anticipate will break. Let's just do it like that. Sure enough, it breaks. When that breaks, where does our new external strong low come? Well, it moves to here, right? So this is our trading range, and we do not care what goes on here, only that once we break here, we know that this is the prime area for getting into trades. And we're going to cover trades, just not right now. We're just analysing the market structure. That's all our job is right now, right? Just analyse the market structure. Then what happens? So let's do this properly. This is our break of structure, right? Now, something that you'll anticipate here, you should at least anyway anticipate, is wherever we get a break of structure, it is also the external weak high, right? At that same time. So that break of structure is also the external weak high. It's where we expect price to break. Break of structure, external weak high. Where does price go to? All the way from there to there. Okay, so now what do? Once we break that structure, remember we have to move this to here. That does not move while we're in that range. That is just the range we are in until we break this structure. Then once we break the structure, what are we looking for? The lowest point between those 2 points here, between that point and that point. The lowest point is there. That now means we can move our market structure swing or external swing to this point here. That's that traded range. Of course, once we break structure, where do we break it to? We break it to here, right? Okay. Now, until we break either structure, this is the traded range. Now look how big that traded range is, right? In comparison to that traded range here, which was there. It's you know, the swing range can change all the time. It's not necessarily a swing range should be short or large. It's just the price action. That's all we care about to anticipate our swing range. So now this is our new swing range until when? Until we create a new break of structure, right? And so let's map that out. Here's our new break of structure. Now, where's our new high point? Our new high point is here, okay? Remember, we didn't really create any, this is really just one move. I mean, you could argue and you'd have a fair point to say, well, hang on a minute, isn't that the range there? Then we pull back to here, then that the range, then we pull back to here, then that the range, then we pull back to here, and then that the range. Realistically, yes, but everything is just moving up. And so because we've got the benefit of time here on our side, and we understand that price is just moving up, this is effectively where I'm going to put that range. So once we break here, I'm going to just drive that to be the new high. Because we've broken structure, this is our new swing low, right? So here's our new range. That's the new swing range where we're only looking to take trades. And so again, once we create that high, what are we expecting? Anticipate that price is really only going to be at a discount down these zones, right? Again, we're going to target supply and demand and liquidity concepts in a second, but we're just right now just understanding what's going on. So this range, this is nothing more than a pullback. Yeah, so not bearish price action at all, just a pullback into the range before, you guessed it, a new break of structure, which occurs there. And then what do? Between this point and that point, we identify the low, which is here. Get rid of that. We now have a new swing range, but of course price just volleys its way back up. Okay, that was that break of structure. And so you would have had a fair argument to say, well, that's the high there. So let us just for now delete this one. Okay, and let's bring our new swing range here. This is our low. And we're not going to include this. This is just a liquidity grab where we just came to claim some liquidity. Here's where it gets messy. So price does what? Comes down here, comes back up, tries to have another go, and then we get what? We get a change of character, right? So this is our low point here. It's not really our low, strictly speaking, because we haven't really come out of that swing range, but this is a fair change of character. And so now what happens? Price comes back. So internal structure, right, which is what? Yellow. We can do this. Do this. This, by the way, we would colour Let me just double check so we know what the color scheme is, so we don't make the mistake. Where are we? So our color scheme is, if I can find it, internal structure, swing, pullback, and swing continuation. Let me just get them online. That'll do. So swing pullback is green. So this we would color green, but we wouldn't only color it green once we break this change of character, right? Then we move, of course, into bearish structure, and we highlight this as yellow because it's a low. But we don't change character until what? So we break here. Okay. Now you may be thinking, so what? What's all this telling me? Well, just for starters, it's just understanding market dynamics again at this level, right? So we've got a breaker structure here. It's a bearish breaker structure, but it's not bearish in the grand scheme of things. You may, by the way, have decided that actually this is super bearish now that we've broken, and that would have been a very, very fair argument and debate, right? Because this is the swing range here, and we are only changing our narrative when the swings break. And when that swing broke here, this would have trapped a lot of traders. This would have definitely caused a lot of indecision in the market, because you naturally start flipping bearish at this point, right? Because you've broken major structure. And so what happens now, right? So the swing range, which has been previously bullish, flips bearish. So again, let's just continue with our market structure low here. This is still our internal range, and we can denote our internal range quite nicely actually. So this would have been our range here. And we'll call that internal strong high. All right, because remember, internal, even though we are bullish, because we are moving down in the internal range, this is now perceived high because we are bearish, right? Now remember them arrows, when we are bearish, we are only respecting the strong highs. We are not respecting the weak lows. So we always anticipate that breaks. Now I would have genuinely, and I'm going to be dead straight and honest about this, you know, while we're moving bullish, I would have only been looking for longs here. And if this would have broken, I would have only been anticipating bearish activity. And so obviously this breaks. And so now this external strong low, which I'll just bring back in here, zoom in a little bit, is now a change of character, right? Now remember when I showed you earlier, it's kind of like this, right? So price is coming back down, and we get this kind of change of character whipsaw actually here, change of character, change of character, change of character. Even though this technically didn't break the external swing, you know, we still have that change of character, right? It's exactly the same. And so this now gives us a change of character. It's external strong low, but it's also a change of character. So let's just map that out. Now I know, by the way, there are tons and tons of these indicators and tools that will show you it. Lux Algo is one that springs to mind, but you should absolutely be able to do this without any indicators. I would urge you all to be able to do this without indicators first, and then once you are confident that you understand this intuitively, then you start to move away from, you know, and maybe get indicators that help you out just because it's easier. But sometimes I just don't like to rely on indicators. I like to, you know, I like to be able to map all of this out myself. And so that's always going to be the way. Okay, so now things have got a little bit messy, haven't they? So we've got to think, okay, how do we logically continue where we are here? So we have an external strong low. That strong low is now weak, because where did we go? We came down to here. Okay. And so now we have to bring this down. And I would now classify that, if I'm completely honest, as a weak low. Okay, external weak low. And I would have, so where's our range? Our range from here, but that needs to not be yellow. That needs to now be that color. And where's our swing? Our swing is here and here. But until we break this, that's the range right now. Keep on doing that. So the range is here, but this for me is now a strong high, and I'm expecting, genuinely, this is how I would anticipate the price to come up here and break. But you got to remember, you should always trade the flow until it breaks. Now it broke here, remember, this is where we was. It broke that line. So for me, that now means we are bearish from a swing perspective. So that's weak. This would be strong, right? Okay. So again, you would be expecting, I mean, you can perfectly see that once we come up to this zone, we got rejected, and then you anticipate price coming back down, but did not happen, right? So that's an interesting dynamic there with how Bitcoin's price action, this break, you know, and then a lack of continuation. So you would have expected that, but that didn't happen. That was a very interesting point in Bitcoin's history for me personally, that, you know, it kind of showed you that even though you might think you are great at market structure, that the market will do whatever it wants to do. Our job as analysts isn't to be perfect every time. It's just to trade what's in front of us every time. And so on the balance of play, yes, this one trade, this one market structure break might have caused us some problems, but actually look how many opportunities we had to the upside in terms of that market structure. 1, 2, 3, 4, and then we got that break, and then we anticipated further action down. That didn't happen, but you had a lot of traded opportunities to the upside, which again we're going to get into in a short while. But just in you know, that was just an odd thing to happen. But then, you know, if we was to dip into the higher time frame, maybe like the 12-hour or even like the daily, we might have just seen that this was nothing more than a liquidity grab. So if we think about it, right, if this was our strong low previously, let's go to the 3 daily. No. Let's go to the weekly. See, there you go. It's a wick, right? And we don't really classify wicks whenever we talk about price action and the relative strength. We don't really talk about wicks, because wicks are what we call liquidity grabs. Yes, this was done on a much higher time frame, and so you would definitely be forgiven for that, but technically speaking, that is still nothing more than bullish market structure, right? But you know, we have to be fair. We're trading on the 4-hour. Just always be mindful that if it's not clear to you on a particular time frame, we always have to zoom out. So technically speaking, yes, this was nothing more than a liquidity grab, but you know, from our perspective, we're trading the 4-hour. So anyway, let's get back to it. So where's our swing range? Our new swing range now is here. That was the change of character. But then what happened? We have the swing range here, external high. That's a week low. At least it's a 4-hour week low. It would not be a week low on the weekly, but it would on every other time frame. And so now we have that swing range. So price comes back into the external strong high, comes back down. So we now have what? A new range here. Okay. And we are back bullish again on the swing. Of course, what do we do? Just like what we always do. This has probably been the biggest swing range so far. It's quite a swing range there. But now the swing range reduces massively, right? Because we get this nice breaker structure here. Actually, it's a change of character. Change of character on the 4-hour. There's plenty of change of characters on the lower time frames. You can see here on the internal there'll be a change of character there. But if we're talking specifically on the swing, this would be the change of character here. Okay, and then once we break that change of character, we do what? Bring our external low, and then this now becomes our strong low, okay? External strong low. Got to remember as well, a lot of this stuff, you know, can be driven by lots of crazy different things. Sometimes it can be FTX goes crazy. It's not really gonna respect too much your market structure, and that's why you'll get these kind of moves where, you know, price will just dip down and then go back up again. It's not just TA, right? You got to remember there's also fundamentals involved as well. So this is now a week high. I'm purposely taking my time with this and going nice and slow because I want people to really resonate and understand as I'm going through each of these time frames exactly what's going on, right? Okay, so that was the week high there. Actually, I'll just do it like this for the sake of visibility. And what do we do? So in the range again, this is our range, and all we're really considering is that what we absolutely expect the external week high to break, but we expect the strong low to hold, yeah? And so it does exactly that, right? What do? We print a new high, okay? And then what do? I'm going to zoom in a little bit here so things become a little bit clearer on this particular market structure. Then this becomes a break of structure. Break of structure was our new swing high. And then where's the lowest point between here and here? Sorry, no, where's the lowest point between here and here is there, right? That's the new swing low, which we expect to be what? Strong or weak? Of course, strong. So when we're trading, right, this range, we've broken structure. So whenever we break structure, we bring it to the high, which in this case is here. Okay. Put a new dot on the page to signify that high. Let's really make this expanded so it's clear. Okay, sorry about that. So that's the high. This is the low. So we expect the strong low to hold and we expect the weak high to break. So we have the breaker structure here. Price moves up there. You could argue that that's the low, but I'm not going to bother with this at this stage because I know it went higher. And then what? Price comes back down. So this is the low here. This was the low point between these 2 points here. Okay, so when we break structure here, we have a new BOS. Okay, and then once we break structure, we can move our external strong low here. Okay, and then we see a lot of this kind of same stuff, which does a lot of that messing around with the. So this is where it gets really challenging and more advanced as a trader, that we've got to just understand what's going on, right? So market structure's gone high, we've come low, and we've created a new high here. Okay, when we create a new high, we're looking between the points. So where's the breaker structure? Well, we haven't got a breaker structure at this stage yet, so that is our high up there, and this is our low. Of course, we get this huge move to the downside that happened in what, 1 4-hour candle? What's that price? Let's see, over 2,232 basis points. Sometimes these things just happen where they just absolutely rip. But this whole section here is pure inducement, right? This is just to create liquidity, because oftentimes whenever you get these huge moves like this, super pushes to the upside, we're going to get this consolidation pattern, and so eventually you'll come into these kind of range where it's difficult to analyze market structure. At least you then have to zoom out a little bit, right? And so might not want to go into the 4-hour at this stage. We might want to start maybe going out to the 12-hour and seeing what the 12-hour presents us. And so again, you can clearly see very wicky around these points, but let's just continue to analyze. So higher low, higher low would have been down there, higher low, higher high. We break that low, this goes here. Let's go back to the 4-hour. Where's that range? Yeah. Okay, there's the low. Then theoretically, you would change this to a weak low because we broke the previous market structure, right? We had a change of character there. Difficult to analyze when it's like this. Very difficult to analyze. But, you know, it'd be easy for me to come on and cherry pick everything that I wanted to just analyze. It's just important that we understand what's going on. And so now we change this into a weak low, and this becomes a strong high. Okay, so now, you know, again, don't get too twisted with all of this. What this should start presenting to you is when we're in a range, having a really nice idea and plan for trade executions. Like, if you think about it, we know that this is the strong high, so we absolutely expect that this holds because we broke structure here. And so now you're only looking for shorts when price comes into this zone. Remember what we've done before. Okay, you're only looking for shorts here, you're only looking for longs here. But remember, it's difficult. It's much more difficult to look for these lows because we're already down here. We expect the weak low to break, don't we? And it does. It breaks here. It wicks. Still, it gives us that break, right? And so, you know, be very easy to keep on mapping out this kind of trend structure. But this is, for me, it was the low of that move. I'm not going to categorize the wick as the low. And so that's our swing range right now. And we remain in this swing range for this entire price action. And so I wouldn't, like I said before, whenever we've got price action, an external swing high and low, we're not really bothered until we break it, right? And so it's just until we see a break of play, all we're really doing is just continuing to monitor to see what goes on. Of course, being able to take trades. Remember, we're not just swing trading here. We're just doing this to analyze our range, which we can have some level of confidence around, right? Each time, some level of confidence around that the weak should break and the strong should hold. Of course, that doesn't happen. We know that it's never gonna. Strongs are never gonna hold forever. Of course, they don't. This is the whole point. I'm not saying here, you know, I am actually saying only ever trade strong highs for confidence and strong lows for confidence. Don't trade the opposite. That's because over time, if you trade over 10 years and you traded this way, over the course of the time, you're going to get more right than you get wrong. And moreover, your risk to reward should at least be 5-1 on all of your trades. And so that's why it's always important that eventually even the strongs will break. We know that, of course, they will happen, but that's not what we're here to do. We're here to have a plan and a structure around how we manage that, right? So again, we're just in this kind of structured bit now, which we're not too bothered about, but there's plenty of trading opportunities in and around that. And so, of course, we just bring it to the next point here. Technically, because we created a change of character here, this for me is the change of character back to the upside. Okay, and then what? Where did we go to? We went to here. Okay, so the point between the break and the low, where's that high? Sorry, where's the highest point? It's here, right? Sorry, where's the lowest point? My bad. Between here and here. Well, it's kind of somewhere around here because it's a bit wicky. It's a bit difficult to note where the new swing range is. So for now, let's bring the high here because that is not the change of character, the high, because that is clear, right? But like always, we have a nice big long swing range. But the moment we create a new change of character, this is the bit what people get wrong often. So here's our breaker structure, my apologies, breaker structure right here to the upside. Now once we get a breaker structure, now we go between the 2 points. Where's the low? The low is here, right? That's our new swing range. So this is weak, this is strong, Remember, we don't expect the weak to break. Sorry, we don't expect the strong to break. Should have been a strong low. My apologies. We only expect the weak to break, and the weak breaks there, of course. So then what happens? That becomes our new point here, like that. Okay, and then when we break structure, we get a new high point here. Okay, so of course that becomes the high point, which is weak. This is still our low until we break it. Okay, and so of course what happens then? If this is our low, this becomes our change of character, right there, and our low becomes here, because we're going to just draw that dot. This becomes our low, and then the only time, you know, what are we looking for? Where's the high between these two? So the high between these 2 points is there. That hasn't changed. The high between this point and that point, which we have now, is what? A break of structure. Yeah. Okay, so that candle there. Where's the high point? Well, the high between them two is here. So that's the new point. And so if you were to color these, this now changes, right, to a weak, a strong high, and this changes to a weak low. Now remember, every single time we only anticipate weakness to break and strength to hold, right? So once this breaks, get our change of structure, and then what happens then? Create a new low here, and a high, and a low, and a high, and a low. So we get a lot of really nasty bearish action here. So each time it's just moving down your range and recognizing that you are getting a break of structure each time. And so, you know, like I said before, a few times we had a little bit of mess here where it was difficult to trade, but now we're getting lots and lots of really good ideas where we should only be focusing on the weakness and the strength. In fact, we should always only be focusing on the weakness and the strength, just because that's, you know, where do we trade from a sign of strength? Where do we trade from a sign of weakness? We should only ever be thinking about that, because here, look how many opportunities we've had. So from this point, 1, 2, 3, 4, 5, 6, 7, so on and so forth. Now these are 4-hour candles, remember. So on a 4-hour, you know, once we get down to the 15-minute, you'll see that there's a lot more opportunities, of course. But this would technically be green because it's bullish, green because it's bullish, green because it's bullish, bearish, bearish, bearish. Higher high, lower low, lower high, lower low, lower low, lower high, lower low, lower high, lower low. And again, just bringing our swing ranges each time we break structure. Break of structure, break of structure, break of structure. And then what do we do? Once we break this structure, that's the highest point there. And then we can move this down here. This is our swing range. Now again, it doesn't stay like that forever, right? So now there. Do you know what? There's so much more to cover in this. I am actually just going to skip forward to this part here, right? Let's see. So we're bang live to current, because I'm sure if you haven't already switched off, I'm sure you're going to be switched off soon. I think you understand from an importance perspective that understanding the price action is key, right? So let me bring us forward to this point here, right? I don't want to lose anyone who's switching off, because we're going to start getting to some key concepts in a short while, right? So yeah, we'll leave this one here. And then we'll get into the next. Rather than just dive in, let's take a quick pause. I'll come back on the next section, which we'll cover more in depth on the next iteration. cool. Okay, welcome back. Look, if you didn't already switch off from a lot of that price action, you definitely would have switched off, because there was a lot of price action covered all the way back here, but a lot of this is just continuation of what we were doing. But I will just continue the price action for this little phase, and this brings us bang to price action as we see it now, right? So how are we going to do this? Well, let's just start here, right? So let's just do our swing. So let's say that that's the high. This is our external strong. Would that be strong? No, it'd be weak initially, because price action is bullish, remember, until we break change of character, which is where it's here, right? Because that's where we flip bearish, because we got higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then we change character when we flipped there, right? So that's that change of character. So now what are we anticipating when we change character? The high point is here, the low point is here. So this is the low, okay, and this is the swing range, remember, until we break here, this point. This is then a new break of structure, and then we look at the high point between here and here, which is there. That's the high point. So we can now bring our swing range down to here, and this is our traded range, right? Lots of opportunities to trade here, and again, we're going to cover that shortly when we get to this point. But then we create a new break of structure, so this becomes the low point here. Then we change break structure again. Just kind of whizzing through this right now, because I think you should be familiar with enough of this. Break structure. Where's the high point between these two? It's here, so we bring that down there. That becomes our high. Okay, and what happens there? High and low. This is our range. That's difficult here, because again, when we cover liquidity in a short while, you'll see that actually this range here, okay, we got a couple of liquidity taps, but didn't change or break structure in a sense, so we just continue with this move. Okay, so the only time we physically break structure is on this one here, right? So this now becomes, and you could argue actually it's the same both ways, right? So this is officially our break of structure here, and this is the strong high, because the moment you flip bearish, the highs become strong and the lows become weak, right? So this becomes strong, this becomes weak, and every time we expect the weak to break, and it did there, so the weak broke. Okay, so we got to break a structure. So what happens then? Price comes down to here, so now we have a new swing range. That's there. Okay, so now we do our range again. There, and then what happens? That becomes a break of structure. Where's our high point within all of this? It's here. So mark it on the chart. And we bring that there. This becomes our new traded range. Okay, so then what happens? Where's this logo? Goes to here. We could argue we get another little change of character. We could also argue that this is a wick and doesn't really count. Perhaps not, so let's not do that. But this low did break, and so this is the new low. And so we have to draw the range low. Call that the weak low. Okay, so we have, at this point, this is the range that we're working within. Okay, just between here. But then, of course, price rattles up, breaks that. So now, theoretically, we flip bullish, right? And we'll denote that with a different color just because it'll be clear, right? So now we've gone bullish on our internal structure. We can move that up there. This is our traded range now. So all of this is just price action, internal structure. Okay. So we've not broken the low. We have broken the high, but what do? We do not print. I'm actually going to bring this down to here. We do not break the low. In fact, what we do is create a higher low and a higher high. You can argue actually that is only a wick, but again, if we go down to the 2 hour, let's go down to the 1 hour, let's go down to the 15-minute. Yeah, it's only a wick, so it's fair, but we do actually break structure here, right? That's where we get an official break of structure. So that is our high point, okay? And we can actually go to the wick. Ooh, go to the wick there. Okay. I just needed to show you why it's important that we understand what's going on, because whilst we don't accept wicks, we do accept lower time frame wicks. But there was no lower time frame wick here. Sorry, lower time frame candle body. But now we are bullish, right? So we have flipped bullish because of this break. And so what is this? This is now strong, right? Internal, external, long, low, and external, weak, high. External, weak, high, right? So now where's our new traded range? Our new traded range is here. Let's just go to the wick. And so what are we thinking now? So now that we've kind of understood the whole dynamics of the market structure, right? What did we get? We got a change of character here, right? Let's just make sure we factor that in. Then we got a break of structure, confirms our bullish trend. And now when we go, what's the lowest point between this point and this point? The lowest point is here. So this is our traded range. And this, my friends, is what we're going to use for the remaining portion of our deep analysis, supply and demand, multi-time frame analysis, all that kind of good stuff. So I'll see you in the next one. Okay, my friends, if you stayed with me this far, drop a like, subscribe, all the good stuff, please, because that would be lovely. It really helps the channel out. Also, if you stayed with me this far, drop a little fire emoji into the chat to let me know that you've watched this far. I'd be really appreciated. Anyway, right, so let's just talk about some of the really fun stuff now. So we've just anticipated what our swing range is, right? We've gone from bearish to bullish, back to bearish. We've flipped, we've changed character, we've broken structure, all that kind of good stuff. We haven't talked about trading. Where's an optimal place to trade? Why should you get in a trade at some point but not another point? Where does liquidity come into it? Where does supply, where does demand come into it? We're going to talk about all of that stuff now. So, firstly, once we know where our range is, right, we would like to be able to understand strength and weakness, right? So, strength and weakness is really whereabouts on the chart relative to the swing. Is it discounted? And where relative to the swing is it premium? Now look, because we are now bullish, right? This is the discount area, yeah? We expect, we should always expect the external strong point to hold and the weak point to remain high. So let's move on to some theory to signify a bearish move, right? What this normally means is we have some inefficiencies created by excess, right? Excess because it's an overwhelming disproportion between buyers and sellers, right? And this section here, these are called many things: fair value gaps, vector candles, imbalances, excess, call it what you want. The reality of exactly what they are is where there is a huge amount of imbalance, disproportion from buyers to sellers. In this case, it's sellers to buyers, so we have way more sellers than buyers. And what happens on the order book is the order book, because there's so many orders coming through, the order book flies through, and there's a lot of slippage created here, right? So people who wanted to sell at if these were different price points, if this was like 29k, if this was 28k, I'm using really high level numbers here, 28k, 26k, 25k, 24k, blah blah. It means that a lot of sellers wouldn't have had an opportunity to sell at this point because one or two big players have really hammered that price down. So it's created an imbalance, an unfair part of the chart. Sorry about my Scouse accent there. But part on the chart where the orders have not been filled. And so oftentimes what will happen, the The central exchange, as an example, has an algorithm that wants to always fulfill orders and give opportunity to traders who have not traded before a chance to trade in these areas, right? And so what we're always looking to do, and this is where you have a little edge over the market, because edge number one is understanding market bias, understanding where we are relative to the swing. Are we bullish or bearish? Well, you know right now that we are bullish, right? We've confirmed that we're bullish because our swing structure has changed. Now what we're looking for is inefficiencies in the market. Where is price being inefficient? Where is excess come into the market, also known as a single print, come into the market, which has affected the balance of play. It's given a lack of opportunity to traders. So that's the key thing that we're looking for. Whenever we're looking for inefficiencies, always looking for the candle that creates the previous candle before that inefficiency. So this would have been that candle there, right? That we would look to get a sell opportunity, because usually what will happen is price will come back in, fill the gap, come back into the supply zone, or supply zone if it's sell, demand zone if it's buy, and then go on its merry way. Does it mean that price will just come up to here and always go? Absolutely not. It's always going to be dependent upon a number of things. Liquidity, it's going to be dependent upon whether there is what market direction you're going. Like if we're bullish, I wouldn't be doing the opposite to the opposite way, because chances are, even though it will come and get a reaction, it could continue through that price action. So effectively fill the gap, but then continue on through that. So we've got to be specific with the types of trades we want to go after, right? So when I'm talking about liquidity, what am I talking about? How do we spot the areas that we expect price to come into? Well, liquidity you can see in many different ways. You can see like this. And so what happens is, well, along this line here, you have all of these stop losses where people have been expecting. Usually it's inducement, right? So price is expected to come into the zone and then bounce, come into the zone and bounce, come into the zone and bounce, come into the zone and bounce, until such time that it doesn't, right? And when it doesn't, all of this liquidity of stop losses and high leverage traders that have liquidation levels all down here, eventually what will happen naturally is that price will come down and absolutely rocket through, big red candle, and effectively take out these levels of liquidity. And so realistically, from our perspective, we don't want to trade those supply and demand zones where liquidity is expected to be, because you can either be liquidity or you can be on the side of the market that is going after that liquidity. And so that's, again, just something we can identify in a second with the candles. What other types of liquidity do you see? Well, again, they call many things, but double bottoms, equal lows, call them whatever you want. These kind of ideas where stop losses are generated here, order blocks, all of these kind of things are all around where liquidity is created. And so we've got to be cognizant of that fact. Okay, so let's just take this off the page. We know exactly what we're dealing with here. So how would we identify some good potential ideas? Do we see any inefficiencies here right now? Any kinds of imbalances to where we can maybe think, okay, there's an imbalance here. But right now, on the 4 hour, not at this zone, I don't really see, at least to my eye, too many efficiencies, right? Because there would have been a small inefficiency here. You can see a tiny gap between this candle and this candle. But you can see this price actions came and filled that gap, right? Like I say, the market always likes to come back and try to fill that gap. So when we don't have efficiencies, okay, is it worth going down to smaller time frames to start to see if there's any more? Well, yes, I think it is. Let's see. Let's go down to the 2 hour. Do we see any inefficiencies? Well, yeah, you can see here we have an inefficiency, right? You can see to the top of this. Let me put my magnitude on really quickly. Top of this wick to the top of that wick. If I bring this out here, of course, we've already tapped into the inefficiency, but it hasn't closed the gap. If anything, that's the new gap. Now, what did I say that we want to target? We want to target this candle here, right? Like that. So that would be a nice long zone that we can expect price to come into, because remember, if we continue and concede that this is the weak high and this is the strong low, we expect that this will hold, but what we want to see is a deeper correction into here to get a long position, right? Why is my mouse just decided to stick? Okay, so we absolutely anticipate the price should come down to here. Does it have to come into here? Absolutely not. It does not have to come down to here. It's an advisable or expected or something you would want it to come down to here. This would be our A+ setup, but it doesn't have to come down to here. And so now we just got to kind of sit and wait and see, right? You know, let's look at the internal structure right now, because I think that's going to be the next concept we want to see, right? So price has made a higher low and then a higher high. Then of course we know from a multi-time frame analysis perspective that price is going to come down and probably end up breaking through this high here, right? So can we start to look at opportunities to the downside as we're making new lows? Well, interestingly enough, now we've changed character, right? So let's just map that out. So price has come down, made a new internal low, and we have a change of character, right? Let's color these in our swing color, which is yellow. So there's the low, there's the high, new low, new high, new low, change of character here. Okay, new high, but we have not broken the low. So where's the internal range? So we can't do that yet. Where's the internal range right now? Internal range is here. So just need you to focus one quick sec here. Bearish, bearish on the pullback, yeah, internal bearish, 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 bearish. So this we would anticipate as a weak low internal, because we'd anticipate that it breaks, but I'm not going to do it as a weak low. I'm going to do it as a strong high, a strong low, because internally I've seen that structure's shifted, right? We've got a change of character. So I'm going to call this an internal strong low, and I'm going to call this an internal weak high. So we expect that not strong, internal weak high. We expect that that's going to break the same way we do with our external or swing points. We can also do on our internal, right? Lower low, lower high, lower low, lower high, lower low, higher high. So what do we expect? Lower low. So theoretically, as we see it live now, yeah, we can suggest that maybe that is the low, and that we should anticipate a higher high, higher low, higher high, higher low, before eventually what? Breaking and creating a new external higher high, and then taking the low point from that breaker structure as the lowest point from that breaker structure as our new swing low external. And that's how we do, that's how, you know, whether it's internal or external, it's just a way in which you can map out the zones and trade on the kind of different time frame, right? So if we expect, right, that this is a change of character, which is what we're looking for, right? So we've had that change of character on the internal, right? Let me just get rid of that and get rid of that. So again, change of character, but then we get actually a break structure there. So I know that's a change of character. Then we get a break of structure here. That's the break of structure. Then we get the change of character to the upside, coming back down. Then what? If we break here, whenever that would be, that would be our break of structure to the upside, confirming potentially that move is now in, and we should expect that the external weak high is broken. So let's move into the 15-minute now, right? Because now we can look for opportunities now that we know where our internal structure looks like. Had the breaker structure, now we have the change of character. We come back down into this demand zone. So again, you can do this on every level, right? Got a new high here, new internal low. So at least on the 15-minute, this is our new internal structure. Let me just double check that. Hang on. Higher high. Sorry, lower high, lower low, lower high, lower low, higher high, lower low. Yeah, that is our new internal structure range. Just make sure I haven't got that. Yeah, that's fine. See, I could have done this all polished, like I know absolutely everything, but you know, it's got to be true, got to be fair. Just having a sip of my drink. So this is a weak high internal. So now what? Now we're zoomed in, right? We know that we're already in that nice phase, and even on the smaller time frame, higher high, higher low. We haven't created a higher high yet, but do we have any excess? I mean, we can see a ton of excess anyway, can't we? But this brings a interesting point to me. So look, we have excess here, right? And here's the reason you would not target this move. Why would this not be a good move to target for a reversal? Because we know market structure is not in our favor right now. We flip bullish. This is not a good target to place a trade. If anything, the target would have been down here, right? Like, you can all, I mean, can we suggest that we've got any imbalances or excess here? Well, look at that. So before this price action here, right, price moved up on the 15-minute. We created excess between here and here. Where do we target? We target the candle that starts the excess, right? And then where's our entry? And this is, again, this is coming from a sign of strength. We want to go just below here, right? Just, I mean, it's easy to see in the week, but you want to give your price somewhere to move. I mean, you may even want to go lower than here just in case this is perceived as, you know, a bit of a liquidity move. You may even want to go down as low as here because, again, as I was saying before with liquidity, price sometimes likes to come and collect liquidity. So that's a liquidity zone. Yes, we've came in, but not enough. But, you know, what is true is we've came and collected the excess there, right? And so where's our target price going to be? Well, on the internal, it's up to you. Theoretically, you can go as high as the internal. That would give you a 3-to-1 risk to reward. Or you can go to the external, which we now believe, based on market structure, that is the right place to go. So you can give yourself plenty of breathing space with this, and that would still be a nice 8 risk to reward. And that's how we do it, lads and ladies. We identify the excess. I mean, realistically, what you can do, again, if we take to this point here, right, how would we know what's going on, right? So at this point, let's assume we want to target this zone here, right? Because we've seen excess being built and we're watching this live. We now believe, because we printed a new high and we've got a new internal swing structure, that we want to go bullish, right? Okay, so we've identified the excess. How do we know where we're going to get in? So do we blindly just place our move here? Is that a good idea as a limit order and give yourself a little bit of wiggle room? Or do we go multi-time frame analysis fractal and go down to the 1 minute, right? So at that stage, okay, just double checking something. Sometimes when I change my time frame, it passes about. So now we're coming into the zone, right, what we anticipate to break. And so again, here's where it gets really, really kind of technical, but we're looking at these lower time frames, right? So we're on the 1 minute time frame. We are higher high, lower low, lower high, lower low. Let me get off the magnet tool. Lower high, lower low, lower high. And so now what we want to see, we know we want to get in here somewhere, but we don't know where yet. What we're waiting for is that market structure to give us a change of character, right? And then just enter in with a market order. So let me just do this in real time. So we get a big move to the downside there, right? So now you're thinking, okay, it's come into the zone, big shift down, but we want to realistically wait for the change of character if we want to be properly about this, right? I'm just gonna bring this over. Market structure wise, higher low, lower low. Okay, we've gone a bit deeper. Oh, sorry, my bad. Let's bring this across here. Okay, so on the 1 minute, we're just waiting for a change of character for us to be able to get in and execute our trade. Okay, so next one. Right now we haven't seen that shift. Okay, starting to see a bit of a move up. We want to see this break here. When we break this, we get that change. First time we get a change of character, right, from a market shift perspective. Okay, still nothing. Yeah, so the point I'm trying to make here is, yes, you may get a limit order here that might work out great and successful. However, if you're following market structure in its fractal nature, right down to the 1 minute, this is the zone that you've already identified where there's excess, right? So now you're just trying to figure out, when do we change on that lower time frame? This is the range here, right? There and there. We have not broken that range. We're not classifying wicks. We need to see the wick break high above. Still nothing. Let's just forward it on a little bit. Still in the range. Now we've broken our we've had a change of character here, which is exactly what we wanted to see. Now we can look at excess on the 1 minute. Change of character. Where are you? You're here. Okay. And now it's like, okay, well, I'm looking to get in at a market entry now, right? So you can see maybe there's some excess built here. So theoretically, we can look somewhere around here, this zone as an example. Let's just see. So now you've got your hand over the market execution button. You've got your pre-stop loss plan out. So you know where you're going to put your stop loss, whatever it would be. Could be below the lows, below the liquidity. Remember, it doesn't really matter. You've just got to make sure that you're happy with your stop loss and your position size. Okay, so now maybe as your entry, you enter into here, expecting that price could come into this zone. So you hit market entry now. Go into a bit of drawdown. But obviously, you've got your stop loss. Because you've had your change of character, you were absolutely expecting that. Now, interestingly enough, can you see exactly what happened there? This was the excess, right? Because this was that zone, this was that excess there between this candle and that candle. And this was the candle that we would have picked. Shame on me for not picking that, but let's see. I'm just going to hit play. And now we get the breaker structure. And we are where we are. So we are smack bang up to date in terms of price action, but breaker structure there, and that's your trade, right? That's just multi time frame analysis on different time frames. It's like that could be a nice entry. And that's how you do it, really. This is the zone that you mapped out. I mean, if you're really cute, you can actually just bring that there. Obviously, that massively increases your risk to reward ratio. But I would just, be mindful of the fact that liquidity is being built up here, and so that might want to come and take some of that. It might not. It's all to do with how the market moves and whatnot. So I hope you've got a lot out of this session. We covered an awful lot. You can tell, obviously, we spent a lot more time on the market structure analysis, because for me, market structure is the pinnacle and the bedrock of everything that you need to understand. Everything else comes second to that. Entry and exits, making sure you understand your market conditions, where's the bias, which way we're moving. You don't need any indicators to tell you any of this. Everything we've done here has been without indicators. And so that's really it. Look, link for my Discord server is in the description. It'd be great if you guys want to come over and say hi. Obviously, if you need a central exchange, it helps me massively if you use my link. That is also in the description. I use MEXC. And that's it. I think we'll call this one a close, if there are any comments, anything you'd like to see, if you'd like me to break things down a little bit more, deep dive into some other areas, I've only covered a small percentage of everything that we want to cover in terms of this, and I think maybe I'll break each section down into a more deeper understanding. But this was that first stab at, look, masterclass in market structure, understanding the difference between your strength and weakness, identifying the zones of the supply and demand, multi-time frame analysis, that you don't just dive in just because, you know, you see a zone. You want to see that market structure is being respected, and that you want to see that on that 1 minute time frame, or the 5 minute, whatever your weapon of choice is, that you get in at an entry on that change of character. Now, if you want to be a Jedi Knight like me and the rest of the team, head over to the Discord server, and I shall see you guys in the next one. Thank you so much.